It's nice we have ourselves here today again. So today we are going to be learning terminologies. Terminologies in forex trading. There is nothing you are going to do without knowing the terminologies. This is actually going to be a theory class, but I'm going to be more kind of explanatory so that you can really understand how what I mean. Yeah, it's going to be explanatory class, but theory, okay? So the first thing is ask price. I want to waste our time so that we can understand. Whenever you see anything called ask price, because you really need to know trading, not like a layman on the street. You need to know it as a professional. So that means there are some certain things which you need to get yourself to understand, to know what it means, to know the certain thing that is all being said in the market, so that you can have proper understanding of it. So when you hear something ask price, it simply means to buy. To buy. That means I want to buy. Okay, let's say it like this now. I now feel like the market is going to buy when it gets here, right? So I now put my ask price. This is my ask price. This is the price that I feel like the market is going to buy. Then that means once the market get there, it's going to do what? It's going to buy based on if your analysis is right before, and you feel like the market will buy right from that place. So that means that's my ask price. I hope you understand now. So that is that about that. The second thing is account balance. The account balance of your forex trading matters. And this is the value of your account, the money you deposit, the profit, the loss, the equity, the trading, the open trade that you have, the open position that you have. It is all included in this account balance. So imagine now maybe you have $100 account, and in that $100 you open like two trades running positive, maybe for $5 each. That's $10 profit, right? So that means your account balance is like $110. We call it equity, like the present money reading on your account. So it's all the calculation of whatever that is in your account, the loss, the profit, the swap, commission, whatever. So number three, asset. What is this asset? An asset is known as an instrument. Is a product which can be traded on the global financial market. The list of assets include currencies, commodities, stocks, bonds, and indices. So let me talk more about this. Let's check the list. The list are what? Currencies, stocks, bonds, and indices. These are them. But now let me kind of talk more about this. The currency. Now under the currencies we have the AUD JPY, USD JPY, Euro card, USD Henry Hen, AUD CAD, depending on whatever that you are trading. Okay, let me just be more explanation about it, about the assets, because we have different things that you can trade in the market, like a lot of things. You can trade a lot of things in the market. So here now we have USD, Euro, a lot of them, right? Okay, name it. Sorry, let me just read it. Euro card, USD JPY, like anything named currencies, as far as it is currency, that's the asset you are trading. So if I ask you now, what is the asset that you are trading? No, I'm trading currency, I'm trading commodity. What are the commodities that we have? We have a lot of commodities that we can trade. We have gold. Gold is a commodity. Just say gold USD. We have palladium USD. We have platinum USD. We have silver. You can trade silver, oil, and some other lot of things. You can trade yeast, wheat, a lot of things that you can trade in the forex market. So when it comes to stocks, you have the Australian index, we have the Hong Kong, we have the Japanese, we have the Dutch, we have the UK index. We'll just stop there. Again, what about bonds? It's an asset as well. We have bonds as in different forms. So because this is like a new thing to you, like a thing. If you go into this down, it's going to take us a lot of time together with what we have bonds as well. Bonds. Let me just put it that way. And we have indices. That's the indices. To me, I will just put in some of these synthesis indices. And the reason why I'm putting it there is that because we still have some other indices like Nasdaq and some other stuff. But here the synthesis indices that I know that I I'm actually trading as well. We have the volatility. We have the volatility 75. I'll just call them fixed volatility index. We have some 75 highs as well. Because I'm trying to remove what we don't need or what we are not even going to go into. I'm trying to remove them. We have crash and boom. In this crash, we have 500, we have 300, crash 300, crash 500, crash 1000. Here as well, we have 300, 500, we have 1000. So it depends on what you're doing. And then let me just say, part of the list of this currency as well include cryptocurrency assets rather. Part of this asset include crypto. Yes, because you can trade crypto as well. Instead of buying or holding crypto, you can actually trade it as well. Like the forex market, you can trade BTC USD, right? ETH USD, XRP USD. Name it any currency you can actually trade. But most time you can actually trade the major ones. Okay, you can trade the major ones in the market. So number 4, bar chart or graph. Bar chart or graph. Okay, this is also known as OHLC. And what is the meaning? It means open, high, low, and close. If you remember when I was making analysis about candlestick. I said we have the high, we have the low, we have the close, before it opens another price and all of that. So it's all about this bar chart and graph, because each of these is like they are like instrument in the financial market, and they tell us every time when things are happening. Either the bar chart, I made it known here that these are the things: bar chart, can do, line graph, area, baseline. All these things are allowing us to understand what is the price of the market saying each time. It's like an instrument that we use. Okay, so another thing that you need to know, which is terminology in the forex market, is BS. So this BS is a simple thing. I'll just explain with this in a simple way. It refers to traders who believe and expect that price will fall. Okay, we can just say they are the opposite of bull. Bull believe that price will go up. So now, BS, let me show you something. Bear is actually an animal, okay? And when it attacks, it is going to attack you, knocking you down. I don't pray it attacks you, I'm just saying. So imagine the market now, when there is BS, it's only like going down. From here now, from this exact place, BS enter. Always say sellers entered. They enter the market, and ever since they enter the market, it keeps doing what? It keeps selling. It keeps selling. They are BAs. These are BAs. Don't worry, when we get to bull as well, you are going to understand better. Okay, I'm going to delete this. We have the bid price. Bid price as well. What is this bid price? It's just when you sell, the price at which you sell, the price at which you feel like a currency is going to sell, and then you sell. What about the ask? Remember we did ask before. Ask price. Do you remember that? This is the price you buy. So, but we have bid as the time, as the price, as the price that you sell in the market. Please, let's keep all these things in mind, because they are actually very, very valuable. Okay, then let's go to buy limit order. What was buy limit order? It's an order to buy provided the future ask price is equal to the predefined value. And the reason why, let me just use the very simple English for you. Maybe you want to, okay, let me go to a real chart. Okay. Let's say that maybe this market has not reached this area, this zone, because we actually call this support, but we are not yet there. So let's imagine that the price has not gotten here, okay, and you feel like price is going to come here, and then you already place your buy limit. That means you feel like the market is going to reverse back up. The market is going to buy there. Are you getting me? You feel like the market is going to buy here. So you are asking the price in the future, in advance. Okay, imagine me saying that this trade it will come back here and then buy. That it's going to buy up when it's come back here, right? So that means I'm going to place a what? I'm going to place a buy limit here. Just like when you've done an analysis and you feel like maybe by afternoon, need your section, market is going to buy. it has not really gotten there, or probably maybe you are going out, you can set down your buy limit it's going to buy automatically when it get there. That's the reason why we use buy limit order in the forex market. So another thing now is bull bull market. The bull market is a period when the stock, financial market, or anything is described to be, going up. It keeps going up, keep rising. It keep rising. Why the bears? Don't forget, oh, the bears is always going down, right? And we have the bears now. Like I've explained before. Bear market is always going down. Isn't it? That one is always going down. Why bull market is always going up? This place, there is a lot of buyers in the market. Okay, let's see from here. Okay, this is a weekly time frame. Let me go back to the 15 minutes. Yes. Right from here, you can see buyer coming in into the market, and the market keep appreciating, keeps going up. That means this is a bull market. This is a bull market. And then why this is a bear market? Because it's crashing. Oh, like now they say BTC is in bear. Oh, we are in a bear market. That means we are in a downtrend. Like we are selling. It's not appreciating. Let me just put it that way. Like we are it's depreciating. The market is depreciating. The price is not so good. But in the forex market, you don't really care if it is bear or bull, because you're going to make money when the market is appreciating and when the market is depreciating. You are going to make money in any of these time in the forex market. So it all depends on just you knowing what you're doing in the forex market, and then you trade whatever you want to trade. So, and then when we also saw that the market is bullish or the market is bearish, I hope you already know what that means. That means it means like it is rising, okay, and here means that it is selling. The market is selling. The market is rising when it is bullish, and the market is selling when it is bearish. So if I say, oh, I'm bullish about gold, that means I feel like gold is going to buy. If I say I'm bearish about USD JPY, that means I feel like it is going to sell. That USD JPY is going to sell. So these are the simple things. These are the things that you need to understand when it comes to terminologies of forex trading. Just for you to know some certain things that are there. So let's say currency pair 2. What is currency pair? What is commodity? Currency pair are just all these USD JPY currency pair. That means you are pairing a currency with each other. You are, oh, this is USD. I mean USD. Currency pair. You are pairing currencies to each other. Some people actually used to trade currency as just the currency, like the US 30. You can just trade the US dollar itself. You can trade the US dollar itself without comparing, without pairing it. Because Euro card now, that means you are trying to pair euro to another currency. You are trying to pair one currency to each other. So currency pair, that is what it means. And then we have commodity. Commodity are just they are raw material that is being traded in the financial market. I would like to explain it as well. These are the raw materials being traded in the forex market. And then we have them. I'm going to list them. I'm going to list some of these commodities for us that we used to trade in the forex market. You have crude oil, you have some natural gas as well, we have precious metals. This is where we have gold, silver, and agricultural assets such as wheat, coffee, and sugar. These are commodities in the market whereby you can trade those commodities. You can actually trade them and make your money. But don't trade what you don't know. That's a good advice. Don't trade whatever you don't know. Whatever that you don't understand, don't trade it. So another thing I would like us to go into is day trading, day order. This day trading is that means you're actually trading within a day. You are a type of trader that only open a position in the morning and then you close your position in the afternoon or after an hour. It works for scalpers too. Maybe like you trade just for 30 minutes, 20 minutes, 10 minutes. It doesn't mean like you have to stay in the market all day. Whatever happens after you've closed your own position or trade is no more your concern. You don't need to stay in the market all day so that you won't be tempted. And as a beginner, you need to know your limit. Once you already gotten a how do I call it? Once you already gotten a price or of your trade, you got a price, you enter the trade, it gets to where you are going, and then again you feel good about it. Then what's the problem again? Nothing. So you just have like say, oh, that's good, and I'm good with whatever I've traded already, and then you close your trading for that day. Day order is either a buy or sell order that expires automatically at the end of the trade. So maybe you make a buy limit or you make a sell limit and then they expire after the day. That's just what it means by day order. So all these things now are essential for you to know. And the first, you can actually read more about them if you feel like you don't understand more, or you can still ask me questions either on Telegram or you message me on WhatsApp. So it's going to be of help so much for you. So I'm actually supposed to talk about double top or double bottom, but okay, well, we can still go there. But they're actually like practical stuff. Because that's something I actually just have to show you practically, but I won't go deep into it until we reach the exact time. This is a double top. This is when the market forms when the market forms when a price touches when price touches a zone two times and forms something like M. This is double top, why this is double bottom. Don't worry, we don't need more of it. Again, I'll talk about demo account. What's demo account? It's just a virtual amount given to you so that you can use to trade, to learn trading. It is basically nothing. You can't withdraw it. It's not withdrawable. Some can even give you up to like $100,000, $10,000, depending on anything. They can give you as much as they want. It's the virtual money for you to learn the forex market so you can know more about the forex market. So this is where we are going to stop today, so that tomorrow we're going to have another set of terminologies in the forex market. Master this, understand, watch and watch again till you understand it deeply, please. God bless you. Subscribe to my YouTube channel and make sure you like the video. God bless you.